Tonight, the secret tax deal some of our best-known firms would rather you didn't see. Is there anyone there from Northern Inchfell in this building? Because the sign is up here, and this is the address they give. Yeah, it's definitely there. In a joint investigation with French TV, the UK company's making massive tax savings in a tiny European state.
I've never seen anything like this before, setting out in raw detail how a tax avoidance scheme works.
And the accountants advising political parties on taxation who devised the deals. It comes in the wake of one of the most talked about budgets in years.
I regard tax evasion and indeed aggressive tax avoidance as morally repugnant.
The Chancellor is promising a new law to crack down on tax avoiders. Will it work?
It's going to be used to condone tax avoidance rather than to condemn tax avoidance.
The government says we're all in this recession together, but is it giving a green light to big business not to pay its fair share? Welcome to Luxembourg. I'm trying to find some Luxembourg cuisine. A tiny country at the heart of Europe. 1 million people visit every year. This is a Luxembourg speciality. It's a type of champagne. So what's it got to offer? Ask the capital's mayor.
We have the Schleck brothers who won the Tour de France.
Cyclists, okay. Very, very nice. Luxembourg is home to 500,000 people.
It's the proof that small can be beautiful.
But its biggest attraction is not the food and wine. Luxembourg has a reputation as a tax haven. Thousands of companies have their offices here, their tax affairs hidden behind impenetrable codes of confidentiality, until now. We've got thousands of pages of documents revealing the secret tax deals of hundreds of companies, many of them world-famous multinationals, all negotiated with the tax man here. They were leaked to a French journalist and he agreed to share them with us.
The documents involve the most sensitive information for all those companies. The profits, how they move their profits around the world, and how they're going to pay their taxes.
Well, it's unprecedented. I've never seen anything like this before, setting out in raw detail how a tax avoidance scheme works for the benefit of the tax authority that's facilitating it. That's the beauty of it. We're seeing really with these, for the first time, exactly how companies avoid tax through a jurisdiction that wants to help them do it.
Richard Brooks writes for Private Eye magazine, but used to be an investigator for Her Majesty's Revenue and Customs. The documents are complex and technical. Richard's agreed to help me get my head around some of them.
If I lent you £10 with no interest, that would be a zero coupon bond.
Really?
Now we've covered the zero, the coupon and the bond.
Are you getting this?
But the convertible bit is important as well, because the bond is convertible into shares.
I'm lost. I'm still owing somebody a tenner and somebody's owing me a tenner.
Your original...
The language used might be difficult to understand, but the end result isn't.
It's fairly straightforward. It's to move profits from a country where they're taxed at a normal tax rate, which might be 26% or 28%, the kind of levels the UK has, to a country or a territory that has much lower tax rates, where they may be taxed at less than 1%.
So who's been getting a tax deal? It might not look much, but this is the Luxembourg office of one of the UK's most successful multinationals. GlaxoSmithKline, the pharmaceuticals giant. The company's run from corporate headquarters 300 miles away in London. We've discovered that it's been avoiding tax on some of its multi-billion-pound profits. Thanks to Luxembourg and its enticing tax regime. Now, with the help of these secret documents, we can tell you how they did it. For GSK, it was about reducing profits in the UK, which were then taxable at 28%, while at the same time taking advantage of Luxembourg's extremely generous tax breaks. It required some clever tricks, all legal of course. GSK is based in the UK. In 2009, it opened a new subsidiary in Luxembourg. The following year, that subsidiary lent £6.34 billion to a GSK company in the UK. In return, the UK company paid nearly £124 million in interest back to Luxembourg. So that's £124 million gone from the UK company's taxable profits, so no longer available to the UK taxman. And the financial magic didn't end there. If the transaction is big enough, the Luxembourg taxman will agree, up front, an extraordinary deal. Tax, effectively, of less than 0.5% of that 124 million. Not bad, considering it would have been taxed at 28% in the UK. So that meant that the taxman in Luxembourg only took around £300,000, leaving GSK with a potential saving in UK corporation tax of £34 million. Magic. That was year one. The plan was to do the same thing all over again in 2011. And it was all approved here at the tax office in Luxembourg.
Astonishing, isn't it? This rather nondescript building is the centre of what goes on here. This is where the deals are done, which help make this place so desirable for business.
Well, there's an unholy alliance here. There's certainly the multinationals that want to reduce their tax bills without incurring any real economic cost. There's a country within the European Union that is exploiting its position as a member of the club to say, come here and use us to avoid your tax bills back home. And there's the advisors that are more than happy to do it, to help them do it.
So just who was advising the companies in our documents? PricewaterhouseCoopers or PwC, one of the four giants of corporate accounting.
They are the biggest tax advisors to multinational corporations in Britain, and they're extremely well connected within government and within the opposition as well.
Over the last few years, they've given more than £1 million worth of advice to both coalition parties and Labour. From their Luxembourg office, they devised all the tax deals in our documents. Tax avoidance, or what most people call tax dodging, is not illegal. But is it fair?
Absolutely, without a shadow of a doubt, legal. But I'm still able to ask the question, is this acceptable? This is purely artificial structuring, which is designed to undermine the tax revenues of the UK.
Last year, companies paid just over £42 billion in corporation tax, around 10% of the Exchequer's total revenue. Even so, tax avoidance by big business is reckoned by the revenue to be £1.2 billion. Tax investigators say it could be 5 times as much.
What my members see every day is that some large businesses are managing to avoid paying their fair share of taxes, which means that everyone else has to pay more tax. That doesn't seem very fair, it doesn't seem very reasonable.
Just over half of the biggest 100 companies listed on the London Stock Exchange have subsidiaries in Luxembourg. GSK is just one of them. And remember that magic formula. Get some of your profits offshore in a place like Luxembourg and reduce your UK tax bill. But there was a big problem for big business, UK tax law, and its controlled foreign companies rules.
These laws that say that if you control a company in a tax haven and divert profits into it, will still tax the profits of that company.
But two corporate giants, Vodafone and Cadbury Schweppes, as it used to be called, had other ideas. They argued that the rules breached European law by limiting economic freedom. It led to battles being fought at the European Court in Luxembourg and the High Court in London. By the time Vodafone's case got here in 2008, it looked like the rules were dead in the water. The judge said the taxman couldn't even examine the company's books. The accountants, PwC, were quick to sell this as an opportunity. Our secret documents reveal that shortly afterwards, they devised a tax deal for another major UK company. Northern and Shell. You probably won't have heard of it, but you will know some of the companies it owns, like Express Newspapers and Channel 5. The man at the top is Richard Desmond. His company's also got an office in Luxembourg. It's a little tricky to find.
That's number 11 and number 12. We're definitely on the right street, so we'll just see where this takes us. Here we have it, the 17. This looks like a stamp shop. The building, is it? Standard office building, very narrow. Here we go, the 5th floor, Northern and Shell.
Hello?
Hello, how are you?
I'm fine.
Good, good. I'm wondering if you could help me. I'm looking to speak to someone from Northern and Shell.
Right. I don't know who this is.
Oh, sorry, my name is Dara McIntyre. I'm a reporter with the BBC.
Right.
In 2009, this office, above a humble stamp shop, became the proud owner of £804 million worth of company debt.
I take it you work for Northern and Shell. You just don't want to speak to me, is that it?
No, I don't work for Northern Shell.
Oh.
No, I don't know what... this is a different office.
Is there anyone there from Northern and Shell in this building? Because the sign is up here, and this is the address they give. Yeah, it's definitely there.
I'm not aware of that, no.
That's strange, because this is the address on their company accounts. Our documents show that before 2009, Northern and Shell companies in the UK had been lending each other money. £804 million. There was no obvious tax advantage to be had on these transactions in the UK. So Northern and Shell looked to Luxembourg, where it set up a company and transferred the UK loans there. Interest payments left the UK, leaving lower profits available to the UK taxman. In Luxembourg, those same profits got the magic tax breaks. The end result? It looked like Northern and Shell had just saved £6 million in UK corporation tax. Bingo. The deal was so sweet, they did it again, this time creating a potential loss to the UK taxman of over £9 million.
But you're definitely not Northern and Shell. Hello? Our friend is gone.
The company puts its money into Luxembourg and borrows it back. It just sends money around in a circle and picks up a tax break on the way.
Just the sort of thing those rules on taxing foreign profits should have been able to deal with.
So you would have expected that to end up in negotiations with tax officials?
There shouldn't have been any negotiation about it. I mean, that should have been a straightforward case. Here's your tax bill.
I'm trying to speak to the main man, Richard Desmond, who I hope is somewhere up there.
We were told that the Northern and Shell chairman was abroad. Richard Desmond didn't want to be interviewed, but his company later told us that the board considers it entirely proper that Northern and Shell endeavours to structure its tax affairs in a tax-efficient manner. It says it has an open, honest and positive working relationship with Her Majesty's Revenue and Customs, and that where there are differing legal interpretations between ourselves and tax authorities, we will engage in proactive discussion to bring matters to as rapid a conclusion as possible. PricewaterhouseCoopers say that all their advice and assistance is given in accordance with UK and European tax laws. Their client relationships are strictly confidential and they cannot comment on individual cases. And it says it provides limited and fully disclosed technical support to the main political parties. By 2010, more than 150 companies were in dispute with the taxman over whether they should pay UK tax on their foreign profits.
But the tide was turning. The Court of Appeal ruled that the taxman could go after the foreign profits of UK companies after all.
Rather than pursuing companies through the courts, the taxman started doing deals. But were the companies paying enough? Parliament didn't think so.
We asked the National Audit Office to undertake an inquiry into the settlements that HMRC were reaching with corporations. There's big money at stake here. In fact, both the National Audit Office and HMRC say that up to £25 billion could be owing.
One of the deals that troubled the MPs was Vodafone's. The company had set aside £3.1 billion in case it lost the dispute. In 2010, Vodafone eventually settled with the taxman for less than half that amount.
It was suggested in Parliament that Vodafone actually owed much more, £6 billion. Her Majesty's Revenue and Customs described that figure as absurd, but refused to say how they settled the case, citing taxpayer confidentiality.
Because of the veil of secrecy surrounding all these decisions around tax, and we're talking big numbers here, lack of transparency means that we, on behalf of the taxpayer, cannot be certain that this was a good, honest, proper deal.
Vodafone told us that it complies with the law in all the countries where it operates and that it discloses all relevant facts to all relevant tax authorities. Her Majesty's Revenue and Customs says large business settlements are carried out according to the law, clear codes and practices. We know Vodafone did a deal, but who else? Pharmaceuticals giant GlaxoSmithKline did one too. We know because their man in Luxembourg says so.
You've just spoken to the manager of GlaxoSmithKline, Luxembourg. He tells me a deal was made with the taxman back in 2011.
GSK refutes any suggestion of wrongdoing. It told us both the UK and Luxembourg tax authorities are agreed that we have paid all the taxes that are due. Over this period, we paid £1 billion in UK taxes. We take very seriously our duty to pay tax, but have a duty to our shareholders and patients to be financially efficient so that we can maximise returns to investors and fund the development of future medicines. GSK agreed to close down the £6.34 billion loan operation through Luxembourg. We asked how much tax they had to pay, but they didn't answer that question.
When we're talking about the tax affairs of large corporations, they should be totally open, totally transparent, and we should see them.
So what does the government plan to do about tax avoidance to make every tax penny count?
I regard tax evasion and indeed aggressive tax avoidance as morally repugnant.
So not just evaders. You'd be forgiven for thinking that the Chancellor's budget speech was bad news for tax avoiders too. Like those companies using legal ways to wriggle out of paying the taxman.
Big UK companies involved in tax avoidance schemes. Would you, in theory, find such schemes morally repugnant?
Do we think that companies and individuals should pay the tax that they are legally required to do, consistent with the way in which Parliament has legislated and with the intention of Parliament? And yes, we think companies and individuals should pay that tax. This government is determined.
But is it morally
well,
repugnant?
yes, yeah, but yeah, absolutely. But that depends on exactly what a company is doing.
The government says it is committed to introducing a new anti-avoidance rule. They say it will only work if it focuses on the most serious cases of abuse. But the union, which represents senior tax investigators, doesn't agree.
It will only catch the really most objectionable case, and the vast majority of avoidance will not be caught by it. And indeed, anything that's not caught by this will now be treated as reasonable tax planning. It's rather as if you legalise murder and then say that your crime statistics have fallen.
So where does all this leave the companies in our documents and their Luxembourg tax deals? Remember those controlled foreign companies rules, the ones meant to stop multinationals avoiding tax? Well, the Chancellor has relaxed them.
Deals designed to avoid tax by draining profits out of the UK should be caught by the taxman. But from now on, profits created by the overseas subsidiaries of UK-based companies should face little or no tax.
That's good news for another big UK company, Pearson, which owns the Financial Times and Penguin Books. Again, a company with subsidiaries in Luxembourg and a dispute with the UK taxman.
I'm looking for Boulevard Grande Duchesse Charlotte.
Here's what Pearson were doing according to their company accounts. In 2004, Pearson in Luxembourg were lending almost $1.5 billion to their operation in America. over 7 years, almost $500 million in interest flowed back to Luxembourg. Because of a loophole in the old controlled foreign companies rules, profits appeared to escape UK taxation. But in 2008, that loophole was closed, so profits could be taxed after all, something Pearson well knew.
No sign with their name, though.
By 2009, company accounts revealed that £26 million in tax had not been paid. The reason? Pearson, like Vodafone before it, believed that the controlled foreign companies rules breached European law, and so they still said that tax wasn't payable.
No brass plate, but just a copy of the Financial Times.
We asked if they paid up, but they wouldn't tell us. They did say Pearson pays all tax legally required in all jurisdictions in which it is subject to tax, and it categorically refutes any suggestion that it refused to pay any tax for which it was legally liable. Now that the Chancellor only intends to tax the UK profits of big companies, that Pearson scheme involving America and Luxembourg would probably face little or no tax.
Those changes are effectively exempting a whole range of income that is moved into tax havens by British-controlled companies. They will be taxed far more lightly, if at all, than they were under the old rules.
No wonder it was smiles all round when big business got together with government last month.
The tax regime in this country is now competitive with virtually every country in the world. There is no better place from which to run a multinational corporation in tax terms. I believe that fervently, and it's the result of 10 years of hard work.
And among those doing that hard work, GSK and Vodafone, two of the companies who'd been in dispute with the taxman. The coalition invited them and others to consult on the new rules.
Your question was, is the influence disproportionate? Does somehow business have a backdoor key to Downing Street?
I'm not saying that big business has a backdoor key. I think the front door has been wide open. I'm saying it's blatantly clear that big business has had disproportionate influence on government policy.
I reject that. I don't think they've had disproportionate influence on government policy. Government makes its own decisions. They don't take a lecture from the CBI or from me.
Obviously, the interests of businesses are ones that the government has to take into account, quite particularly when they are so concerned about the weakness of the economy. It matters less if you've got a great prosperity, a booming economy. It's not so urgent.
The Treasury reckons relaxing the rules and taxing foreign profits will cost over £800 million in the next few years in lost revenue. Worth it, says the government, because it will boost investment and encourage more companies to move their headquarters here.
And they're already coming. Aon, the world's largest insurance company, is moving its headquarters here from Chicago.
When it's finished, this building will become home to some of the 6,000 Aon staff who already work here and the new arrivals from the States. So what exactly will the UK get out of it? Well, not a lot. Only 7 top executives and a small group of support staff will actually be moving to London. All told, just 19 people. Aon says that although relatively small in number, those moving to London represent the executive decision-making within the firm. There are lots more new jobs on the way, but they'll be in Chicago, not London.
My guess is that the benefits of this for the UK economy are pretty trivial. We'll get a little bit of revenue from the people who were brought over, but the impact on our economy is going to be very small. Moreover, this is a global competition. Other countries will be trying to do the same thing. We may find we will lose more than we gain in this.
Aon told us that while their decision provides them with increased financial flexibility, the resolution to move to London was primarily a strategic one. But in the small print of Aon's disclosures filed with US financial authorities, tax was a major motive for the move.
Look, these are difficult times, but if we want to see growth, if we're really determined about seeing growth in this country, we have to have a competitive tax system.
Business in the UK now pays a lower rate of corporation tax than most of the world's biggest economies. But what are the consequences of this competition to attract companies by taxing them less?
A core of this, I think, is a race to the bottom on the taxation of profits and capital income. What is clear, fundamentally, is that as the tax revenue that can be generated from the corporate sector diminishes under this long-term downward pressure of tax competition, somebody else must pay more to support the functions of the state, or the functions of the state themselves collapse.
Whether or not the government attracts more businesses by asking for less tax remains to be seen. And if they do come, what will ordinary taxpayers get out of it? What the secret tax deals in Luxembourg reveal is just how far companies will go to avoid paying their fair share. Next week on Panorama, on the eve of the Eurovision Song Contest, we go undercover in the host country Azerbaijan and hear from the voices of protest the regime would rather silence.